Hello traders, Gary Wagner here. It is Friday, the 5th day of August, approximately 1:30 in Honolulu, Hawaii, and this is the daily report for silver, our weekend review. Silver did close lower today, closed off by about 50 cents, 38.33. You can see that on the screen. An interesting scenario in silver when we compare it to gold, in that we had a major divergence today with gold moving up and silver moving down. But more importantly, we broke and traded through some critical support levels within the marketplace itself, and that's what we want to spend some time looking at. First thing I want to do is go to our daily chart. I'm going to go ahead and blow it up, and this has, in essence, our Fibonacci retracement points. Now, we have two Fibonacci retracement points. The first one starting right here at this record top up at around $50 per ounce, down to the low right in here, right around 32.28. Now, the retracement that we had been working with prior was this one, which is just this last rally from 33.17. And we are now going to back adjust that because we have this new high and it has come down so that we can see different levels. And most importantly, we're going to look at a thing today simply called Fibonacci harmonics. To make it easier to read, I simply want to take our text though and move that to the extreme left. And that way you'll see it will be a little bit more easy to read, and we can go ahead and blow this chart up. Traders, there's no doubt about it. The carnage we witnessed yesterday in the marketplace was absolutely a spillover from the stock market really melting down. However, today we didn't have that factor in the market. Whereas we had gold trading higher, this market here, meaning silver, I believe could be indicative of a belief that margins are going to be raised, but we had an absolute divergence. But here's what I'm looking at. Traders, you know that I feel that we have some very, very critical levels. $41 on the upside. That needs to be taken out. It's a resistance level. It has not been able to be breached and effectively form a support level. We have had, up till today, a real strong support level at the 38% level. And what we were witnessing in terms of trading activity was this market trading within this narrowly defined range. Now, we might be simply witnessing a very similar action that we saw here, where it was an aberration. In fact, it traded outside of this range but broke back into it. But in this case, it broke back into it and then broke below it. And so we could have one of two factors happening. And we will have to see how this plays out. The first factor is we're going to have a range-bound market that has that range redefined. Rather than it being that narrow band, the new range might go something like this. In other words, we might have a range in silver where it's trading, 42 on the high and 37 on the low. Scenario 1. Scenario 2, and this will all be determined at the beginning of the week, whether it is able to close open and begin to trade above it, or if it continues down. My sentiment is this: what we really want to look at when we put up these two different Fibonacci retracement areas are what's called Fibonacci harmonics. Harmonics are simply where you have different time cycles, but you get bands. I call them harmonic bands, in which you have very, very close numbers. And this, traders, is a harmonic band. As you can see, 38.74 and 38.96. It's virtually a very, very close price. You see no Fibonacci band here or here or here, but you get another one right in here. So these are going to be some critical areas that we need to look at. If the market trades lower, this is going to be absolutely where I would look to find support. If the market does find support, in other words, if the market begins to trade back up at the beginning of the week, this is going to be even stronger support now because of this band of harmonic Fibonacci retracements. So for that reason, we want to watch this particular area right in here very, very closely and see what pans out. Traders, there's no doubt, when we look at this market, it has been frustrating to say the least, but when I look at it in a line-only close, this is a close-only chart, there's still no doubt it is this breakout below this band that has me wondering, are we going to see this market trade lower, or is this simply an aberration like we saw here? Because we have been very, very range-bound. Typically, in a market that's range-bound, you will get a hard break one way or the other. And this week, we got them in both directions, and there was no follow-through to the upside. We'll have to see on Monday if we get follow-through to the downside. But it isn't a precarious point. My sentiment is when we go back to just straight underlying fundamentals, I'm still bullish on the market. So my belief right now is whether it's fear of margin requirements and liquidations going on ahead of that, or factors in the market that we are yet unaware of, my sentiment still has to maintain itself in a bullish stance, but we have to look at what the facts tell us. And the facts are showing us right now that we did get a break, and that break was below a major support level. So we'll have to see what Monday brings and take it from there. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and report. Bye-bye.